Chat with Traders, Episode 1.
The biggest secret of the best traders in the world is that they're just like everyone else. However, they've worked hard to learn the markets and discover what works and what doesn't. But how can you hear about these journeys and get in on the strategies and tactics they use? You can do it by listening to Chat with Traders. Here's your host, Aaron Fifield.
Hey traders, welcome to the very first episode of Chat with Traders. I'm your host, Aaron Fifield. Man, I'm so glad to finally be launching this podcast. I originally had the idea for this around, the halfway point of last year, and now we're a few days into 2015. But I wish I could have had this to you sooner, much sooner, but better late than never, right? Like I mentioned, I'm Aaron, and I'll be your host from here on in. So to give you a rundown on who I am and why I felt the need to launch a podcast for traders, I'll tell you a little bit about myself. So I've just turned 24 and I'm living in Brisbane City, Australia. Late 2012, I embarked on a journey of learning how to trade. It started with a little curiosity, but quickly escalated into a mild obsession. I saw trading as an opportunity to create serious wealth without being tied to any one location. Not to mention the small amount of startup capital required, minimal ongoing costs, and best of all, no exchange of time for money. For me, trading just ticked all the boxes. After an early run-in with technical analysis, I could see the logic of trading patterns and trends. Therefore, this was the path I moved on. I knew this was something I could learn, but I also knew to do this well, it was going to take a lot of hard work and determination. Not one to shy away from a challenge, I began building my knowledge on how to read charts. In particular, studying the methods of 1900s Wall Street legend, William Gann. If that name doesn't ring a bell, Gann was essentially a swing trader with a big focus on repeating ranges of price and time. During this time, I opened a $5,000 account and have been reasonably active ever since. But the truth is, I haven't seen great success. Well, not yet anyway. But because I've developed this passion for trading, I haven't been discouraged by this. If anything, I'm more determined to make it work. In fact, that is partially my reason for launching this podcast. By interviewing successful, consistently profitable traders, I aim to fast-track the learning curve. Not only for myself, but every other trader facing similar challenges. While that's the big one, there are another few reasons why I launched this weekly podcast that you should know about. 1. This platform gives me the ability to personally connect with traders just like you. So if you would like to connect or just say hey, that would be really cool. Catch me on Twitter, my handle is @chatwithtraders, or just shoot me an email, aaron@chatwithtraders.com. That's AARON @chatwithtraders.com. 2. Hearing about the journey and stories from proven traders are inspiring, insightful, and show us what is really possible. 3. This podcast is an ongoing, free, and valuable resource that I truly hope will help you to continually learn more and grow your account. 4. Through the podcast, I hope to attract a trading mentor who can see I'm serious about, as Steve Jobs would say, making a dent in the universe. So I think that sums it up pretty well. As you can tell, this podcast is undoubtedly targeted towards entry-level traders, and I hope this will soon be considered as a staple for your progression. On the other hand, I also aim to entertain the veteran traders who understand the greats never stop learning. Because as we know, the market moves money from the hands of the uneducated to the educated. So stick with me as I deliver in-depth interviews with the ones who have learned how to beat the market as they reveal their journey of ups and downs, top trading advice, and open our minds up to new strategies and winning tactics. And I also promise to mix it up. You'll find some guests I have on are very well known for what they do, and some will be underdogs, those who are undoubtedly killing it and have a lot of knowledge, but not necessarily in the spotlight. To make sure you never miss an interview, there are 2 things you can do. The first one is go to chatwithtraders.com/subscribe and enter your email. This will get you onto my mailing list, and I'll send you an email each time a new episode goes live, which will be every week around Wednesday or Thursday, depending on what side of the world you live on. Generally speaking, these interviews will range between 35 to 50 minutes. Today's is a little longer just because of the intro. But secondly, you can also subscribe to the podcast in iTunes. While you're there, please leave a 5-star rating and review. That would just be incredible if you could. And it will help us to reach even more listeners. And for every episode, there will always be show notes available at chatwithtraders.com. In the show notes, you'll find a brief overview of important lessons and takeaways from within the interview, plus any links and resources that might have been mentioned. Now, it's important I say this, and this applies going forward too. I want to hear from you. I want you to tell me what you like about this podcast and what you don't like. If you feel there is any way this could be better, or you want the answer to a certain question, or if you think someone would make an awesome guest for the show, please tell me. Your raw feedback will help me to deliver better interviews and essentially better value to help you. I know my interviewing skills are a little rough around the edges right now, but understand I've never actually interviewed anyone before now. So it's something new for me, and it's also exciting, but I promise I'm quickly getting better with each and every one I do. However, your feedback will be genuinely valued. Right, enough of me rambling. Let's get to the meat of this episode and the reason why we're all here. And that is to hear from today's guest. He's an active trader, author, serial podcaster, and the founder of FTMDaily. He is Jerry Robinson. Jerry takes us through his early experiences of trading and how he got started, then leads us into how he trades and shares what works for him. We also discuss specifically the things entry-level traders can do to improve. With the experience and success Jerry has extracted from the stock market over the years, he was the ideal guest to launch. I found Jerry gives a lot away in this interview and was really open in the way he answered every question. So I encourage you to listen closely and absorb what you're about to hear. Again, I'm Aaron Fifield, and this is Chat with Traders. Here is today's guest, Jerry Robinson. Hey Jerry, thanks for making time to come on the show. It's really great to have you here.
Yeah, it's great to be here, Aaron. Thanks for the invite.
No, you're welcome. So now we're keen to hear how you got started and the reasons behind it. So tell us a little bit about how you got into trading and what was it that appealed to you?
I was really young. I was in my very early 20s whenever I first got started trading, and I was working at my very first corporate job. I had a friend who was a trader. I mean, he was a trader. I mean, I think he was brand new at it, but he was doing really well. He had kind of developed a system where he was using moving average crossovers, or he was using, I think he was also doing price over moving average crossovers, and he was really happy. And of course, this was the late 90s. I mean, it was like 1997, so you could throw a dart and make money, in the stock market. And so I really got excited when I saw him making money at trading, and I thought, gosh, if this guy can do it, I know I can. So I started studying a little bit about trading, read some books on it, got really excited about trading, and then I jumped right in. And as I mentioned, we were right here at the end of the 1990s, so stocks were going crazy. There's a dot-com bubble, and so I started making really good money. And I thought I kind of developed an Adonis complex. I didn't think I could lose money. And, I had some moments where I did lose money, and when I did, it really hurt. It wisened me up, and I think you really aren't a trader until you've had a really bad loss. You've got to be and I don't suggest that everybody go out and lose money, but what I mean is it's almost your tuition on Wall Street. You're going to have to lose money, and you know what? I still lose money to this day. 17 years later, Aaron, I think most people, certainly at least in the blogosphere, and when you go out and you look at some of the different trading services and whatnot, they tend to play that down. They play it down. They really talk about how much money you can really make in trading, but they fail sometimes to mention to you that part of making that money is losing money. And so, losing money was a real big, important step, I think, for me. I got started, like I said, back in the mid-1990s, and I haven't ever looked back. I mean, there's been probably periods in that 17 years where I haven't traded as regularly as I do now or did at some points. But yeah, I absolutely love trading. I think it is probably the best business in the world.
No, I like that. Great answer. So when you got started, how did you? What were your sort of your first steps? Did you immediately open a trading account and just dive right into it, or did you start paper trading? Did you build your knowledge
No.
up?
No, yeah, I recommend people start paper trading. I didn't. I just jumped right in both feet with a Scott Trade account. I didn't have much money though. I only had, I think, like $700 when I opened my account, and so I had very little money to get started. Lost half of it, pretty early on, but then started making money, and yeah, so I started with Scott Trade. I still like Scott Trade. I still have an account there. I use mainly today. There's a couple of different brokers that I really like. Interactive Brokers is a really good one. It's nice and cheap. I mean, if price is really your big thing, Interactive Brokers is a pretty cool place. E-Trade. E-Trade's really expensive, but it offers you, Aaron, access to so many different international markets that you can't normally get access to through most platforms. So if international trading is important to you, then E-Trade, offers a really cool thing like that. But yeah, I got started with Scott Trade, just had $700, and it's amazing what you learn over the years and how you can turn a small little measly amount like $700 into parlay it into a fortune. And I mean, I think that's what many people think of when they think of trading. They know that it's a level playing field. Anybody can succeed if they apply themselves, and you don't have to have a ton of money to do it. You just have to have a little bit of money and a lot of drive and a little bit of knowledge.
Yeah, well said. So, what would you say were some of your main early setbacks or failures? Like, what sort of things did you find yourself struggling with in your early days?
Well, I tell you what happened initially to me was when I first started trading, I mentioned I didn't paper trade, so I would just go ahead and trade a stock and not really knowing what to expect. And the first lesson I learned really hard was not to listen to other people's ideas. Now, I don't mean informed traders. I'm talking about the average person at work or a coworker or an uncle at the Thanksgiving dinner. I mean, you just want to avoid taking those kinds of stock picks from people. Also, stuff on TV. I mean, you listen to some of the stuff on TV and you hear different things. I think it's really important for people to have a system, and most people don't, and that's why I think most traders don't succeed, is that they don't really have a set of rules or parameters that they stick to. And that's one of the hard lessons I learned early on, Aaron, was that you've got to have a system. You just can't take stock picks from people. Now, if your system generates the stock picks, well, then that's a whole different story. I mean, that's what we've created. We've created a system that I've been using now for a long time, and it generates stock picks based upon those parameters, based upon those rules. And if you have a system like that, that's one thing. But if you just got an uncle, like I said, sitting at the dinner table telling you why you should buy this one stock, you've got to do more due diligence than that.
Absolutely, you got to be careful who you listen to.
Oh, so important, and that was one of the hard lessons I learned. And then just to go on, Aaron, another lesson was after I lost money in the markets, during that time, I noticed that I had a hard time pulling the trigger. So at first I was gung ho. I just jumped in both feet, put my money in, started going real crazy, made some money, lost some money. But after I had a good loss one time, I think it was like late 1997, early 98. Had a pretty big loss, and I failed to put my stop loss order in where I wanted it to. Didn't fully understand how they worked. It gapped down, and my stop loss didn't even matter at that point because it was a stop limit order. Long story. It ended up really hurting me, and after that, I had a real hard time just jumping back in like I did, and that was good in some respects because it caused me to think about things before I jumped in, but it also kind of paralyzed me. And that's one thing you can't have as a trader. You can't second guess yourself. You've got to have a system, and you've got to work that system, and you can't be afraid, And so I think overcoming the fear of actually putting that money into the market and just trusting my gut, trusting my system, trusting what I was doing, that took a little bit of time. I know there's people who've been trading for some time who still have that problem. They have a hard time pulling the trigger because they're fearful that they may lose money, and you've got to overcome that.
Yeah, I think those are some really good points you make, and I'd like to sort of dive into those a little deeper in a little bit. But I mean, you're obviously doing quite well with your trading now. But before you got to that stage, was there ever a point in your journey when everything just clicked and you just sort of knew that you were going to make a success trading, where you knew you were on the right track and doing something really well?
Yeah, I think so. I mean, I think, it took a long time to really develop and hone down a system. I use technical analysis predominantly to find my entry point. I use fundamental analysis to usually sort out the stocks that I'll actually put my money into. But then I use the technical analysis to filter them down and figure out, okay, which one is the right one to enter right now, right? Because you may have a universe of great stocks, but knowing when to buy them is the key when you're a trader. So I use technical analysis to do that. And technical analysis at first was intimidating to me because I didn't like math. I never was a math, fan. And as I looked at charts, I just had kind of a fascination with them, began to study them. And yeah, there was a moment, Aaron, where it clicked, where I still do this to this day. When I first got started, I would print out charts of the stocks that I wanted to trade and the stocks that I did trade. And I would go back and I would just literally draw on them. I would draw trend lines on them. I would try to find, here's where I bought, here's where I sold. And then I would try to figure out what happened on the chart that I lost money or what happened on the chart that caused me to make money. And I think after doing that for about a year, I really began to feel confident. The other thing that I did was I really began to focus upon, as my account balance grew. I mean, this is hard to do when you have a small account balance, because when you're just starting out, like me, whenever you have just like $700 and that's all you've got, you have to hit a home run on every stock. So you have to take these wild, risks in order to make money. Otherwise, you're just kind of spinning your wheels paying trading costs. So I think when you don't have very much money, you're more prone to take a lot of risks. But as my account balance grew, I began to focus instead on more blue chip stocks that I could buy, Aaron, and then go to bed and not worry about waking up the next morning and finding out that they went bankrupt, So I started focusing on those stocks mainly. And then what I did was I really began to focus in on just a handful. That way, I would know when something was different about the chart. So I boiled it down that for a long time, all I was trading were three stocks. I was trading BP, oil company. I was trading Altria, ticker symbol MO. And then there was another stock. I think it was at the time it was TV Guide. I don't think they're not around anymore in that same form, but it was TVGIA or something like that. Well, anyway, I just traded those stocks and I looked at their charts every single day. And I would notice that if they opened up in the morning, that they would, the stock would do something. And if it opened down in the morning, there was a 60 or 70% chance it would do this later in the day. And so I just came to know those stocks real well. I knew their charts. I knew their behavior. I knew their volume levels. I knew when volume was unusual, so I could take advantage of that. And that's really when I started to really get my stride. And I think that all traders go through a process like that, where you first start out and you're willing to trade anything that moves, anything that'll go up, just let me trade it. But after a while, you realize that that's kind of a losing game in the end. You've really got to develop a niche, or you've got to develop a strategy, or we talked about earlier, a system that works. And for some people, that's just honing in on a handful of stocks or maybe a certain industry. I have a friend who just trades cloud-based internet companies. That's all he wants to do. And he knows those companies and he knows which ones are the best and he likes to trade those. I have another friend who only trades energy, and not even energy stocks, just oil and natural gas. That's all he trades. And he knows those markets very well. So, he can make money at it. But he can't really trade some other stocks. I mean, he knows how to trade, but he probably wouldn't be as much of a success had he tried to just trade stocks. He focuses upon one or two things and does it really well. And that's the beauty of trading. You don't have to be a master of all of these different stocks and know everything. You really just focus on a handful of stocks or maybe an industry or a sector and just really become good at it. And anybody can do it.
So that's something you would suggest to sort of pretty much every entry-level trader, is just to pick a few stocks and get to know them really well before sort of branching out and sort of putting their hands into a whole lot of pies.
Yeah, but I don't think that's realistic. I think most people need to kind of have that wild experience at first, where they kind of just get out there and they just kind of. I don't think it's natural to start that way. I think they should kind of have their normal natural entry into trading. But I think over time, if they've been doing it for a little bit of time, I think that's the wise thing to do. It's now let's pull back. Now let's take some of that knowledge that we've learned and let's begin to apply it to specific stocks or specific sectors. And you know what? Be like Warren Buffett and focus on what you know. I mean, I was working, in fact, I was working at TV Guide whenever I was trading that TV Guide stock. So I knew the company. I began to watch it, and it began to break into a channel where it would bounce back and forth in a channel. So it would go from I can't remember, $48 down to 42. And then as soon as it hit 42 on the chart, it would always go back up to 48. And then as soon as it hit 48, it was like a ceiling. It would come back down to 42. And I can't remember. It was like 2 years where I just played that back and forth. And then it broke one time. Then it went down below 42. And then I had to figure out what to do. So, but that's the kind of stuff that you do when you're focusing upon just a handful of stocks. And you begin to notice patterns like that. And that's where the money is.
Yeah, that's great. So, typically speaking, before you enter a trade, what are you looking for? I mean, are there certain patterns or signals? What are the sort of things that get you excited about a trade to get into it?
That's a good question. Well, when it comes to day trading, and I don't do much of that anymore, Aaron, we were talking about that earlier, and I don't do a whole lot of trading daily or day trading, I guess. Intraday trading, it's just too stressful. I've done it in the past. You can make money doing it, but you can make a lot more money if you position trade. Position trading is different from day trading in the fact that day trading, you're trying to exploit a minuscule part of an existing trend. I mean, you're just literally scalping profits out of it. Yeah, you can make money. But for the person who doesn't have a huge account balance, they need a bigger return in order for the money to make sense or the return to make sense. So position trading is where you identify a stock that is poised to begin an uptrend and you take a position beforehand. Now, it's really difficult to do. It's hard to find bottoms, but that's speculative type of trading. And then, of course, there's swing trading. Swing trading just simply takes advantage of a position or of an existing trend, but for a longer period of time than a day trader does. So I consider myself a swing trader and a position trader. I'll give you an example. Like right now, this is probably, of course, this show will be dated by the time many people are watching it or listening to it. So this isn't really a great example, but I'll just give you an example now, is that one particular commodity that I'm bullish on right now is corn. Corn has been beaten down so hard on the charts, and by looking at it, I've decided to take a position in corn for about a period of about 12 to 18 months. So that's a position trade. It's basically a trade where I say, okay, all of the geopolitical forces and all of the economic forces have driven this price down, and I believe that it's oversold. And so I'm going to step in and I'm going to place a trade and I'm going to buy it, and I'm going to believe that over the course of the next 12 to 18 months it's going to be much higher than now. That is not a swing trade. That's a position trade. A swing trade would be something where I see an existing trend. It's going up, and a stock is just going up, and I just hop on and ride the train higher. So a swing trader sees the train moving and hops on. The position trader sees the train in the station still, and he gets on before it even starts moving. He stands to make the most amount of money if he's right. But swing trading can be just as lucrative if you know how to do it properly.
Yeah, so you mentioned position trading sort of range between 12 to 18 months, sort of that's the sort of the time you're holding it for. How long would you say you're holding a typical sort of swing trade for, just on average?
Usually, I would say my typical swing trade are anywhere from 1 week to 5 weeks, somewhere in there. Usually 5-6 weeks is about the limit. But, the truth of the matter is that lately we've been in this market that just knows no bounds. It just keeps going higher and higher and higher. And so in a case like that, you don't want to cut your losses, or you don't want to cut your gains short. You want to let them run. That old saying, let your winners run and cut your losses short. So in this environment, yes, typically I'll only hold for 5 or 6 weeks, but if the trend is still moving in my direction, I'll just stay in it and I'll just continue to raise my stop loss. I always trade with a stop loss. Learn that early, don't trade without a stop loss. And so I'll raise my stop loss or use a trailing stop loss, but I'll let the stock continue to go higher. And a lot of those swing trades, by the way, got stopped out in this recent market pullback. And that's okay, because then it's just time to take more positions.
Exactly. No, that's well said. So you mentioned earlier how you sort of these days you're using technical analysis to sort of time your entry into a trade, and fundamentals sort of give you the reasons for entering that. Could you just sort of share a little bit more on sort of, I know it's quite a broad topic, but what fundamentals sort of influence your decision?
Oh, yeah. Well, you got to focus on earnings. Earnings drive prices. It literally is what drives prices in the stock market. So earnings per share growth in earnings per share. That's huge. So seeing a company that is consistently growing earnings on a quarterly basis every single quarter, that's what you want to see. Look, you're in Australia. I'm in the United States. In my country, there's probably 55 to, well, if you add in all the penny stocks, there's thousands, but there's, on just the average U.S. stock market, there's about 5,000 to 6,000 stocks that are traded every single day, just the regular stock exchanges. And if you look at those stocks, many people are willing to trade any of them. I'm real picky about what I want to trade. And I think I always encourage traders to be very picky. And the way that you do that is you look for strong earnings, right? Not every company has strong earnings. So you want to look for companies that have strong earnings, growth, and you also want to look for companies that have strong revenue growth and profit growth. But also return on equity is one of the big factors that I look for. I learned that from Warren Buffett, not personally, but through a book. And Warren Buffett, talks about the importance of return on equity. Also, one of my biggest influences was William O'Neill, who started the paper Investors Business Daily. He's written the book How to Make Money in Stocks. One of his primary criteria for a good growth stock is a return on equity above 15 to 25%, somewhere in there. So I like to screen stocks out for return on equity around 25% if possible. I like to look for earnings per share that's earnings that are accelerating, profit that's accelerating. Those are the main things that I look for, Aaron.
Okay, that's great. So people who are just sort of, or traders who are just sort of new to the market and that sort of thing, what's the easiest way where they can access that sort of information?
Yeah, there's some really great sites for free. Ycharts.com, Y, just the letter Y. It's an unbelievable site for free. They've really been kind of locking a lot of it down lately. But ycharts.com, you can go there and you can graphically see every stock's PE ratio, their revenue growth, their earnings growth, the return on equity. You can just chart it all out, and it's all free. And you can set up a free account there. Another great site to check out for good fundamental growth stocks is Zacks.com. Zacks.com, they actually assign a proprietary ranking to every stock. 1 being strong buy and 5 being strong sell. It's a scale. And I look for number 1, number 2 stocks at Zacks. So when I look at a stock and I'll screen it, I'll typically find a stock that meets my fundamental parameters, and then I'll check and see what's Zacks saying about it, and what kind of ranking does it have in Investors Business Daily. You can find Investors Business Daily online at investors.com. And I look at those free tools, and I just try to find out, what's the overall analyst sentiment on this stock? How's the earnings growth on this stock? What are people saying about it? And so I look for that. Those are really great sites. Whitecharts.com, Zacks.com, that's Zacks.com, and investors.com. Those are all some great resources.
Okay, good one. We'll put links to those in the show notes below this episode, and we'll definitely check those out. Now, just moving back a little bit to when you were talking about trading plans earlier, I sort of want to dive into that a little bit more. So, I mean, I know a lot of traders, especially the more experienced ones, also talk about trading plans. So what does a trading plan mean to you, and what should entry-level traders do to create one?
That's a really good question. Whenever I was younger, my grandfather, who served in the war, the Great War, the World War II, told me that it was important when you walk into a room to know the exit. And I always used to think he was paranoid, but it's a very true statement. You got to know the exit when you walk into some place, and that applies to trading especially. Most people don't realize that you make money when you buy, not when you sell. That is a point that is so important, I think, for traders to understand. You have to buy right in order to succeed at trading. It's when you buy, when you place that order, that is the moment where you're making money. Because if you buy wrong, you'll know it quickly. If you buy right, you'll also know it quickly. And so it's important, I think, to know your exit. What's your exit strategy? Never walk into a stock and not know what your exit strategy is. A good exit strategy has a dollar amount. So in other words, if I buy a stock at $30, typically my own personal trading philosophy is that I don't want to lose more than 8 to 10% on a stock at any time, under any circumstances. I'm just not willing to. There's very, very few instances where I will. The few instances where I'll take a larger stop loss than 8 to 10% is when I make a pretty big speculative move, say on a little penny stock, and I'm only throwing a small amount of capital into it. Okay, maybe I lose the whole thing. Maybe I'm wrong. But for the majority of my trades, I don't want to lose more than 8 to 10%, and I stick that in my stop loss order immediately after I place the trade. So I think having a system is part of your trading plan. I'm going to buy the stock. Am I going to buy it on a market order, or am I going to buy it on a limit order? And then you decide that. And then once you get in, you place that immediate stop loss order. And then you decide to yourself, how much do I expect to get out of this? Profit potential is an important part of the equation whenever you are placing trades. You should know approximately what you expect to earn from the stock before you buy the stock. You have to know that, because if you don't know that, then you don't know if you're making the best decision, because part of the reason why we trade is we trade for profit. And if I have 4 or 5 different stocks to choose from, I want to choose the one that has the greatest risk-reward ratio. And so I'm looking for the stock that has the best profit potential for the least amount of risk. So you have to know all that before you jump in. If you're just jumping in because you heard it on TV or because you read it in the paper, that's not a good reason. And you may be buying the right stock, but you may be buying it at the wrong time. So the trading plan really is all about making sure that you have a systematized approach to your trading, and you don't buy the wrong stock at the wrong time, or even the right stock at the wrong time.
Yeah, I think you made some really good points there, Jerry. That's awesome. So, I mean, we might have already covered this a little bit, but where do you often see entry-level traders slipping up, and what would you say to them? I mean, I know you deal with quite a lot of entry-level traders through your training and that sort of thing. So, I mean, what sort of issues do they face that come up quite regularly that you see?
I think probably knowing when to sell. I mean, when you get into a stock and it goes up, right? You buy a stock and it goes up, and you're excited, and you've got your stop loss there, and it's up a little bit. I think sometimes new traders, especially, and even those of us who've been trading for a long time, sometimes it's easy, if we don't have a plan, to get confused and get emotional. When the stock goes up 10%, we think to ourselves, "Oh, this is great. Well, surely it's going to keep going up," and then it goes back down, and you lose all your money all the gains that you had made. So I think it's important that you don't ever let a gain turn into a loss. You can do that through stop loss orders. But I think that's probably one of the things that discourage a lot of traders is that they don't know when to sell. They're either too timid or they're too greedy. And it's a hard lesson to learn. It's one of these things that you just have to learn through consistently doing it and using a system. So again, when I enter a stock, I typically have a profit potential that I have in mind, and I have my stop loss. And I know all those things right when I buy the stock because I immediately place a stop loss order, and then I begin to watch that stock. And if it gets up, let's say that I plan on making 8% from that stock. Well, when it gets up to 8%, I'm moving my stop loss up really tight because I don't want the market to tank the next day just all of a sudden, and my stock and all my gains that I worked so hard to get, now they're gone. Right now it's back down to zero and I'm flush again. That's terrible. And so you want to lock in those gains, and that's why you need to know your profit potential. So again, if my profit potential on a stock is 8 to 10%, I expect it to go up by that much, then I want to watch that stock. And when it gets up to that level, I want to choke up that stop loss and keep it real tight. That way, if it does fall back, I still make money. And I would say for most new traders that I encounter, usually figuring out when to sell is usually the hardest thing. And you can overcome that with the system. That's really what you have to have. You have to know what would cause me to sell. What would that be? What are the sell signals? And if you don't have any of those, then you're going to lose money. So you got to have some sort of warning system built in that you can refer to. That can be a moving average crossover. It could be RSI. Something happening in the RSI. It could be a stochastic move. I mean, there's so many different things that you can look at that will give you an idea that maybe it's time to bail on this stock. You just got to have that in mind and have that up front so you don't lose money.
Great. So I've heard you saying before, and I quote, trading can be learnt by anyone willing to put in the effort and the time. What is it that you believe stops the majority of traders from making that huge success?
No system. They don't have a system, Aaron. They are attracted by the amount of money that they can make. They're attracted by the lifestyle that trading affords. I mean, I got to admit, trading is nice. I mean, the lifestyle is very, very, very good. When you succeed as a trader, you have the ability to work from anywhere in the world. I tell you, this is a personal story. One of the very first traders that I met, it left this lasting impression on me. In fact, this might be the most motivating thing that drove me to become a trader. He was an older guy. He was probably late 60s, and he was a trader, and he had a yacht, and he lived on his yacht. I mean, most of the time, like 5 or 6 months out of the year. And he had his family, his wife and the grandkids, and they'd all go out sailing on their yacht and stuff and doing things. And he would trade in the first few hours of the morning, and he would close his computer by the end of the day, and or by the end of the morning, and he was done. And he would trade like Walmart, he would trade IBM. He had a lot of money, and he would use options and different things, and he would just make $1,000, $2,000 a day because he had a lot of money. And just when IBM or Walmart moves 10, 20 cents and you have a lot of money in it, you can make a lot of money. So it was very low risk trading. And I saw what he was doing, and I thought, you've got to be kidding me. This is fantastic, because I was working a slob job, and I was not very happy. And I thought, man, I've got to make my life something like this. Well, trading now with all of the internet and the computers and everything that we have now, you can do this from anywhere. You can do it from a yacht, out in the middle of the ocean. You can do it from your house in your pajamas. I mean, so trading is really, really sweet in that respect. People see that, Aaron, and they get caught up by it. They get caught up by that, and they forget that in order to get there, they have to have a plan, right? They got to have a plan to get there. And so I think many times people are very excited by the dream or by the vision of what life could be as a trader, but they just don't build the bridge to it and they take set forth the hard work that's required to get there. And again, what that means is when you start losing money in a trade, cutting those losses. And then you're going to buy another stock. And if you start losing money again, you cut the losses. I went through a period where I lost money for about a year. It was the worst time in my trading career. I mean, I could not make money to save my life. It was unbelievable. And of course, this is before I had my system too, but still, I was very frustrated. And I almost threw in the towel. And I think back at that time, oh my gosh, what if I had done that? And that's one of the things I tell new traders is that do not give up. If you really want this, if you really want to succeed, if you really want to have that lifestyle that you have in your mind, you cannot give up. You have to continue. And when you lose money, you've just got to lick your wounds and keep going. But if you stop trading, then it's over. It's over. Now, I will say this. If you don't have a system, that's not my recommendation to you because you're just going to keep losing money. Here's the thing to remember about Wall Street. The guys who are on Wall Street in New York City, these guys are smarter than you and me and everybody that we know put together, right? And if they're not smarter than us, they're certainly more slippery than us. That's a kosher way to say it. They are. It's a very dirty game, trading. And so they see guys like you and me coming a mile away. When we come in and we type in and we want to order 100 shares of a particular stock, they know exactly who we are, and they know how to shake us out and take our money. So that's why it's very important for the average trader who's out there to have a system, to not give up, to understand that he has to have some knowledge, that he can't do this without gaining some experience and knowledge. And Aaron, there's a lot of seminars out there. There's a lot of coaching programs out there, and many of them are thousands and thousands and thousands of dollars. I've never done any of those, and I succeeded. I'm not saying that you can't make money using those. I know you can, but I think when I say system, what I mean by that is that read through many different books, read through different trading books, notice what people use for trading strategies, and start using some of them, and find out which one works for you. Really sit down and take the charts that you've traded and draw on them, print them out and draw on them, look at them, become intimately familiar with the tools of your trade, and just realize that it's going to take time. It's going to take time. Unfortunately, there's been a lot of TV infomercials and websites out there that make it sound like, anybody can make $1 million overnight by trading this one little stock that you don't know about, but I do, so give me money and I'll tell you which one it is. It doesn't work that way. It just doesn't work that way, unfortunately. You got to have a system if you want to do this long term.
Of course, no, that's really well put, Jerry. Now, you touched on a little bit there. I'd sort of like to dive into a little bit more, especially since you've went through that year where you lost money consistently. The emotional side of trading. So how do you manage emotions? And what gives you the confidence to keep on executing trades after a losing streak? Even just a few bad trades, it can be hard to sort of push the button and get back in. What gives you the confidence to keep pushing on and know that your system's working? And how do you know when it's broken?
Yeah, that's a great point. I think what gives me the confidence now is not anything having to do with the stock market. From a economic standpoint, I am of the opinion and the persuasion that this market is completely bogus. It's all funny money that's been created here. So I'm not confident in the market itself. What I am confident in are many of the companies that I will invest in. For example, the United States of America is $18 trillion in debt. That's just on, that's the big public debt. If you look at unfunded obligations, they have $127 trillion of debt. They're never going to pay it off, And so in my mind, companies like ExxonMobil or Chevron, these big oil companies, to me, these companies will outlive nations like America. These companies are sitting on huge piles of cash. They don't need America to sell oil. They can sell it to anybody who breathes and who needs it. So to me, I think of these companies and I see how much cash they have, and I realize that by trading these types of companies, as long as I use a system that works, I'm going to make money because those companies will still be around. And because I use stop loss orders, I also know that my losses will be limited, if I do have losses. And, after trading 17 years, I've only been really a stop loss has really only not worked for me. Probably I can count on two hands, usually from operator error. But a good stop loss set properly will almost always save your hide, as long as it's not some strange anomaly where the price just gaps down something severe. And besides, if Walmart stock or if BP or if ExxonMobil gaps down, guess what? It comes back. So in many ways, you don't have to lose money unless you just have to have that capital and you have to sell. So those are some of the things I would think of, regarding that.
Okay, awesome. So just one other thing I'd like to touch on, and that's tracking progress and reviewing trades. I mean, is this something you do, or maybe you did it earlier on? And how important is this for newbie traders, or is it a little overrated?
Well, I think sometimes it's a little unrealistic to think that you're going to have enough time to do all of that. But I do think that it's very important, and I still do it to this day, as I mentioned, is to always know why you lost money in a trade, or always know why. More importantly, perhaps why you made money. Sometimes when we make money, we'll chalk it up and just consider ourselves great and move on. But we don't stop to really think, now, how did that happen, right? How did those stars align? How did I make that money? And because when we lose money, I think we all know we need to figure out how that happened, because we don't want it to happen again. But likewise, when you make money, you want to make sure you understand so you can make that happen again. And so I would say that probably one of the smartest things that people can do, if they're not afraid of charts. And if you're afraid of charts, trading is probably not the best thing for you, because that's really what you're trading. Sure, you can trade on fundamentals, and sure, you can just trade on some of those things. But I think you're really crippled, especially in this market, because, again, it's so manipulated. So you've really got to see the chart. You've got to see what you're buying, and you've got to see where it's at. So I would say that focusing upon printing out charts, looking at them, maybe you don't have to print them out, but just really pay close attention, draw on the charts, really look at the charts and understand. And I think one of the most important things, the biggest thing that ever happened to me in trading was understanding trends. That was it. All markets, and you know this, Aaron, all markets go up, down, or sideways. That's really all it is. And so when stocks overall, like when the S&P 500, for example, is in an uptrend, 3 out of 4 stocks are going to follow that trend. If a market is trending down, 3 out of 4 stocks are going to follow that trend. So if you're trying to go long in a market that's going down, you're giving your money away. And if you're trying to short when the market's going up, you're just giving your money away. So you've got to understand trends and ride the trends. And I think understanding how trends operate, being able to draw a simple trend line on a chart, all of those things, they seem simple, but a lot of traders I've met don't know how to do that. So I think those are some really important things. Print out those charts. Find out why your trade didn't work by looking at the chart. Try to find similarities in your losses and similarities in your gains, and try to learn from them.
Yeah, very well said. Great advice there. So, Jerry, that's sort of bringing us towards the end of the interview. And again, thanks so much for coming on the show and sharing so many incredible insights. So let's go to the closing bell, and we'll hit you with a round of questions we asked all our guests. So the first one would be, what's the best piece of advice you've ever received? Got you thinking?
Wow. Yeah. Best piece of advice I've ever received. Let's see. Well, probably I would say would be to follow the money. If you want to know the truth about anything, you just got to follow the money. Don't pay attention to what people say. Pay attention to what people do. And when it comes to stocks, it's the same thing. If you want to know what's really happening in a stock, pay attention to what the insiders are doing. Pay attention to what the institutions are doing. Follow the money, and you'll find out what's really happening.
Awesome. What is the number one trading resource you couldn't live without?
I would have to say couldn't live without probably an outside resource that I haven't created for my own self. An outside resource would be probably Investors Business Daily. I read that religiously every day. It's a really good newspaper, and they keep track of what they call the IBD 50, the Investors Business Daily 50. And there's 50 different stocks in there that are the hottest, fastest growing growth stocks. And it's just like it's a great list of stocks to start your trading watch list from. So I start my morning with IBD. I like it. I've been reading it for a long time. It's a great paper.
Great. Name one book you believe is a must-read for any trader just starting out.
I would say How to Make Money in Stocks by Will O'Neill. I think I mentioned that earlier, but How to Make Money in Stocks by William J. O'Neill. He puts a ton of charts, historical charts, throughout his book, and shows you how to tell a good chart from a bad chart. And I think being able to understand when you can look at a chart and just look at it for 5 seconds and know several things about the company, you're in a very good place. And I think that's where that book can take you. You can read that book and learn how to read charts, and that to me was the big difference that allowed me to make more money. Was understanding how to read charts.
Okay, sure. Knowing everything you do now, what would you have done differently come day one?
I would have been more. Probably, let me think here. That's a really good question, Aaron. Gosh, if I could go back and do something different, I would have certainly been more wise in trying to seek out counsel and trying to seek out a mentor. I really just kind of ran out and did it on my own. I was fortunate in the fact that it turned out well, but a lot of people don't. Most people are casualties. So I would have searched out somebody who could have helped me. I would have turned to somebody, and the people I did know who were trading, they were kind of new like me, so they really didn't have anything to offer me. So I would say finding a mentor, getting a coach, something like that. That's probably what I would have done differently if I could go back.
Great advice, Jerry. All right, so that's brings us towards the end of the interview. So do you want to share with the listeners a little bit about your new trigger trading system, and also share with us where we can find out more about your services and connect with you?
Sure, yeah, absolutely. We started a brand new trading system in May of this year, or earlier, May 2014. And it's called Trigger Trade Pro, and they can find it at triggertradepro.com. They can go to your website and find the link there. But the system, in essence, provides a set of technical indicators that we have finagled, and we have created our own system using proprietary indicators. And when all of the indicators indicate a buy, we buy. And then when all of the indicators indicate a sell, we sell. And it has worked out very well for me over the years. And I was finally, and I'm not a software developer, I had to find people who knew what they were doing, and I had to figure out, and it was a big laborious process, but we finally got it out there now. And we have subscribers all over the country, here in America, 7 countries around the world now. And we put out daily trading ideas. Every single night, we have a nightly trading report that lists usually about 100 to 150 stocks that we're watching for that next day that you can analyze that night before. And all of these stocks are stocks that are triggering within our system. They're getting ready to trigger. So that is at triggertradepro.com. That's where they can go to find out about that. We also have a free trading podcast at triggertradereport.com. They can just go there and download the free podcast. We just do a teaching podcast there for brand new traders.
Great. And you've got, you're on Twitter as well?
Yeah. Twitter.com/FTMDaily is our Twitter handle.
Okay, great. All right. Thanks again, Jerry. And we look forward to catching up with you soon.
It was a great honor. I really appreciate it, Aaron. Thanks a lot.
Thanks a lot, Jerry.
You've come to the end of this episode of Chat with Traders, but don't worry, more great episodes are on the way. To stay updated with each great new episode, be sure to subscribe to the podcast in iTunes, and we'd love it if you leave us a rating and review. We'll see you next time on Chat with Traders.